So BitMine stock, ticker BNNR, has been on a wild ride lately, and not in a good way. But what if I told you there's a hidden story here? A story that some people believe could lead to a six-fold return. Today, we're going to dig into the numbers, the vision, and the whole thesis behind this big bet.
All right, here's how we're going to break it all down. First, we have to tackle this puzzling price drop. Then, we'll get into the company's core mission, something they call the alchemy of 5%. After that, we'll check on the health of Ethereum itself. Next, we'll explore the grand vision from Tom Lee. And finally, we'll put all the pieces together and map out the potential path to that 6x return.
Okay, first up, the big puzzle. The thing that honestly has a lot of people scratching their heads right now.
Yeah, this is the question on everyone's mind. Why on earth is BitMain stock down a whopping 15%, when Ethereum, the asset it's supposed to represent, is only down about 3%? That is a huge disconnect, and you really have to ask yourself, is the investment thesis totally broken here?
And this really puts it in perspective. A 15% drop for BMNR versus just a 3% dip for ETH. You know, a 3% move for Ethereum in a week, that's just another Tuesday in the crypto world. But a 15% drop for the stock that's meant to be a proxy for it, that tells you something else is going on. And that's the paradox we need to understand.
So, we have this paradox. But what if the stock price isn't telling the whole story? Let's peel back a layer here and look at what BitMain is actually doing beyond just the daily noise of the price chart. This is where it gets really interesting.
Okay, this is it. This is the heart of their entire strategy. It's a super ambitious goal they call the alchemy of 5%. Their mission is to acquire 5% of all the Ethereum in existence. That's a little over 6 million ETH. And the whole point is to increase the amount of ETH backing each and every share over time.
Now here's what's so fascinating. While the stock price is getting hammered, the company is just quietly executing. They're well on their way to that 6 million ETH goal. In fact, they just crossed the 4 million ETH mark. So despite all the negative price action, the actual mission is still very much on track. So you might be wondering, how are they affording all this? And their strategy is actually really clever and shareholder-friendly. They've promised not to sell new shares and dilute everybody when the stock is trading below the value of the ETH it holds. Instead, they do the opposite. They wait for the market to get frothy, sell shares at a premium, and then use that cash to buy even more ETH. And get this, they're sitting on about $1 billion in cash right now, just ready to make strategic moves.
All right, so BitMain's strategy seems solid. But, you know, it's all built on one single foundation, Ethereum. If ETH itself is weak, then the whole plan just falls apart. So let's zoom out from BitMain for a second and check the pulse of the broader Ethereum ecosystem.
Now check this out. This is a huge indicator of market health. Since the middle of summer, 5 million ETH have been pulled off of centralized exchanges. I mean, that is a massive amount of supply that's just disappearing from the market. It's moving into cold storage, which is a classic sign that people are planning to hold for the long term, not sell.
So you've got this supply squeeze happening, right? At the exact same time, you've got this tidal wave of new demand coming from all sides. You've got the new ETFs bringing in Wall Street money, major institutions are loading up, retail is buying, even some governments are acquiring digital assets. It's a classic supply and demand setup. Falling supply, rising demand.
And if we look even deeper, beyond just price, the network itself is humming along. The underlying data shows everything is healthy. Stablecoin volume is strong, and those layer 2s that are built on top of it, like Base and Arbitrum, are growing like crazy. The foundation is solid.
So, who is the brain behind this entire strategy? Well, that brings us to BitMain's chairperson, the well-known strategist Tom Lee. His long-term perspective is really what ties all of these different threads together.
Lee's vision for Ethereum is, well, it's big. He compares what's happening right now to the year 1971. That was the year the US dollar was untethered from gold, a decision that fundamentally changed the rules of money and kicked off decades of financial innovation. Lee believes Ethereum is at that same kind of monumental turning point today.
His core thesis is that very soon we're going to tokenize everything. Stocks, bonds, real estate, you name it. And the foundational layer where all of this is being built, he argues it's Ethereum. It's becoming this indispensable piece of infrastructure for Wall Street's next chapter.
So this grand vision leads to some pretty eye-popping price targets. But he argues that his conservative case, the $12,000 one, isn't just wishful thinking. He sees it as a reasonable milestone, based simply on the ETH to Bitcoin ratio returning to its 8-year average. So in his view, $12,000 is just things getting back to normal.
Okay, so we started with a confusing price drop. We've talked about the mission, the health of the ecosystem, and the big vision. Now, let's connect all the dots and look at the simple math behind how this all could lead to a 6x return.
A really key concept here is something called the premium. It's simple, really. Look at a company like MicroStrategy, which is a proxy for Bitcoin. It historically trades at a premium, like 1.5 to 1.7 times the value of the Bitcoin it actually holds. Why? Because investors are willing to pay extra for that easy exposure in a stock. The theory is that BitMine, as a proxy for Ethereum, could see that same kind of excitement and trade at a similar 1.5x premium in a bull market.
Now, here's the hypothetical formula. It's really just two steps. First, Ethereum itself does a 4x, going from around $3,000 to that $12,000 conservative target. Second, investor enthusiasm drives BitMine stock to trade at that 1.5x premium we just talked about. So you take the 4x gain from the asset, multiply it by the 1.5x premium on the stock, and boom, there's your potential 6x return.
And if you apply that 6x multiplier to BitMain's current stock price of around $30 a share, well, that gets you to a tangible, though totally hypothetical, future price target of $180.
So there you have it. We've journeyed from a really confusing price chart all the way to a compelling bull case. But that leaves us with the one final, crucial question for every investor to consider. Is this a calculated bet on the future of finance? Or is it just wishful thinking?